If anything goes wrong, and Donald Trump can easily make things go wrong for this country as much as he can for other countries, then it almost certainly will mean some difficult decisions
Yeah.
in the autumn budget.
Well, President Trump's global trade war seems to make sense to almost no one, bar himself and a tiny handful of his devoted lieutenants, and even they privately disagree among themselves. But after the economic growth figures published 2 hours ago by the International Monetary Fund, no one can seriously deny their impacts. A week from his 100th day in office, Donald Trump has hauled the American economy below the waterline. And as things stand, the rest of the world is sinking too, including us here in the UK. Meanwhile, thanks to that tariff war and the president's one-on-one combat with the chairman of the Federal Reserve, Jerome Powell, who refuses to cut US interest rates, markets have been tanking too. One economist suggests if the president gets his way and sacks Powell, well, the market turmoil that we've seen will look like a tea party compared to anything we've seen so far. And since what we've seen so far has been the worst April in the market since the Great Depression of the 1930s, it doesn't look too good. Today, the world's finance ministers are gathering in Washington, D.C. for a meeting of the IMF. The Chancellor, Rachel Reeves, is there, hoping to help deliver a UK-US trade deal, which might cushion the blow on Britain. We'll be looking at her and our chances and study the economic clouds hanging overhead in Washington. And might things somehow work out okay in the end? Might it all turn out according to President Trump's plan? And what is that plan anyway? Where is your money right now? Send me a text, 87222, start with the word Times, or a tweet to @TimesRadio. Firstly, the International Monetary Fund, now having slashed global economic growth forecasts, warns Britain will be among the hardest hit by Donald Trump's tariffs. The IMF chief economist, Pierre-Olivier Gourinchas, delivered the global news this afternoon.
Beyond the abrupt increase in tariffs, the surge in policy uncertainty is a major driver of the economic outlook. If sustained, the increase in trade tensions and uncertainty will slow global growth significantly. Under these reference forecasts, global growth will reach 2.8% this year and 3% next year, a cumulative downgrade of about 0.8 percentage point relative to our January 2025 WEO update. Our report also offers a range of forecasts under different policy assumptions. Under an alternative path that excludes the April tariff announcements, global growth would have seen only a modest downgrade to 3.2% this year.
And to put that another way, if you were one of those who were really worried Donald Trump might take a sledgehammer to the world economy, you may just have been right about that. Chris Giles joins us, the Financial Times economics commentator. Hello to you, Chris. Welcome.
Hi, John.
So thoughts on these economic forecasts out of the IMF, Chris? They look pretty grisly, don't they?
They do, but actually, I think the real thing is they're probably not as bad as reality, because one thing that economic models are not very good at is actually dealing with something that's not been seen before. And we haven't seen tariffs imposed by one of the world's largest economies at this scale before. And if you look at the effects, they just look a little bit small. That nothing's good in there.
Yeah.
But actually, particularly for the US and countries that trade a lot with the US, which luckily doesn't include the UK, the numbers are actually rather small. And I think they could actually end up being quite a lot larger than that.
Right. Okay. Well, look, these forecasts rarely, if ever, turn out to be exactly on the money, don't they? And we are talking here about the impacts of the tariff war. I mean, what about reasons for hope there? If that tariff war somehow changes direction, if mitigations are introduced, is there hope?
Oh, there's certainly hope, because the thing about Donald Trump is that I don't think even he knows what he's doing with tariffs. He's imposed particularly draconian tariffs on the 2nd of April, then paused them for most of the world a week later, but then imposed even tougher tariffs on China, which has already pretty much stopped trade across the Pacific from China to the west coast of the US. If those happen, then I think the results could be pretty bad, particularly in the US itself, because the US gains a lot from the trade and the imports it likes to consume. So I think these policies, the worst thing about the policies in some ways is the uncertainty they bring. No companies are going to want to invest heavily in trade with the USA at the moment when they don't know what the rules of the game is likely to be in the next couple of months, next couple of years. So I think that's the big downside. But the upside risk, the upside opportunity is that Donald Trump is so capricious in his decisions that today we might have big tariffs, tomorrow he might decide to take them all off.
Yeah, well, the only certainty then is uncertainty, and markets and investors just don't like that very much. Now, if you're the Chancellor looking at her public spending and plans or otherwise to raise taxes, cut spending, this just makes that potential problem so much worse, doesn't it? At the time of the spring statement, the Chancellor's number already looked out of date, and there were worries about recession then. Now they're surely going to be that much deeper.
Yeah, certainly the UK was running its fiscal rules pretty close to the wire in the spring statement, only at the end of last month. We're not even quite a month on from that yet, and things look a little bit worse. I mean, I wouldn't want to exaggerate it. You know, we want to give time. Well, the problem for Rachel Reeves, that in a nutshell, is that the spending plans she has penciled in are pretty tight anyway. And there's no room against the fiscal rule. So if anything goes wrong, and Donald Trump can easily make things go wrong for this country as much as he can for other countries, then it almost certainly will mean some difficult decisions in the autumn budget.
Okay, now let's look at, again, maybe, I won't even say reasons to be cheerful because you never know how it's going to play out, but the hope and the work, concrete work that's going on for a trade deal with America in parallel with a trade deal with the European Union. There is capacity there to cushion these blows.
Yeah, I wouldn't get too excited about a trade deal with the US. I mean, what we might get is that Donald Trump might capitulate, frankly, and take off the 10% tariff he's put on the UK. In terms of some sort of big liberalization of trade between the UK and the US, that's for the birds, because those sorts of things take months, if not years, to negotiate. And the same, sadly, for the EU. We can do some small deals on veterinary standards, for example, with the EU. That also almost certainly might well happen quite quickly. But in terms of the really important things like getting back into the single market or the customs union, the things that would really change the outlook for UK trading situation,
right.
Again, that doesn't look likely at all.
All right. Now, look, we've just been speaking about tariffs. Meanwhile, there is this head-to-head, head-butting contest between the president and the chairman of the Federal Reserve, Jerome Powell. And I keep reading and seeing, concerns from economists that could so easily get out of control. The president wants cuts in interest rates. Jerome Powell says he's there to look after jobs and keep down inflation. And that's just adding to the uncertainty. And Jerome Powell's worry is that it could get worse with the wrong decision. And a lot of people's worry, if the president manages to get rid of Jerome Powell, well, then it could all spiral into really serious trouble.
Yeah, absolutely. I think this is really a potentially big problem for the US economy, because Jerome Powell is quite properly saying that tariffs, as far as the US is concerned, both increase inflation and hit growth. So it's really difficult for the Federal Reserve, the US central bank, to decide whether to put interest rates up or take them down. And so what they're doing at the moment is just waiting to see what the bigger impact is likely to be. But this is making Donald Trump extremely angry. It's almost every day he tweets or puts things on social media, on his Truth Social account. Only yesterday he called Jay Powell a total loser. This is sort of language that you only get if you're just about to fire someone. And I think if he did fire Jay Powell, which he can do, whether it's legal, that would be a battle for the courts and thereafter, but he can certainly take the first move and fire him, then I think the turmoil we've seen on markets recently would be a walk in the park. Because what markets really don't want to see is that the US economy totally doesn't have any guardrails at all. And if there was a complete patsy put into the Federal Reserve, I think that would be the concern.
All right, let's try not to get too spooked by this, though sometimes that takes a bit of an effort. Chris Giles at the Financial Times. Thank you so much, Chris.
It's a pleasure. Thank you.